Markets start the week on the lookout for trade certainty as US courts seesaw on tariffs. Australia's housing market sends mixed signals, while retail spending was sluggish in April, and India produces surprisingly strong first quarter GDP. That's coming up in our 5 Things in 5 Minutes on Monday, June the 2nd. And then in our deep dive interview, ANZ Group Chief Economist Richard Yetsenga looks ahead to a suite of trade data in Asia this week, as well as Australia's Q1 growth figures.
Certainly at this point, the indicators we've had for the first quarter are looking a little bit soggier.
But first, in 5 and 5 with ANZ, I'm Alex Tarrant, standing in for Bernard Hickey, who's on a break through June. Markets start the week looking for greater certainty on US tariffs, after an appeals court halted a trade court ruling that the majority of the administration's tariffs were illegal. President Trump in the weekend also announced steel and aluminium tariffs would rise from 25 to 50%. This is April PCE inflation printed at 0.1% for both the headline and core measures on Friday, as expected. ANZ Group Chief Economist Richard Yetsenga says there is no certainty the US Fed can cut rates despite that inflation news.
The GDP now forecast for the second quarter have growth above 2%. So that's not screaming lower rates. And then, of course, the tariff uncertainty squared now, you might say, pressuring both sides of that story. No reason for the Fed to do anything other than make itself as modest a target as it possibly can and just play to what the numbers are telling them, which is on hold.
The S&P 500 closed flat on Friday with US Treasury yields down 3 to 4 basis points. Over the weekend, the US Treasury Secretary said the US was, quote, never going to default amid spending negotiations. Gold will open the week at $3,315 an ounce after closing down 0.85% on Friday. West Texas Intermediate futures are at $60.79 a barrel. The US dollar index was up a smidge at 99.33. The Aussie starts the week at 64.32 US cents, with the Kiwi at 59.61 US cents, both down slightly. Number 2, India's March quarter GDP growth surprised to the upside at 7.4% from a year ago versus the 6.8% expectation. ANZ economist Diraj Nim says lower imports, strong services and agriculture activity, and government capital investment led the surge.
It all seems that the growth momentum is running around 6% currently, which certainly means that there is upside risk to our FY26 growth forecast of 5.7%. But does it mean that growth goes above trend soon? I surely do not think that's going to happen, which means that the Reserve Bank of India still has space to cut the policy rate twice more in June and August by 25 basis points each, and then perhaps once in October if growth so warrants.
Number 3, Australian building approvals fell 5.7% in April, following a 7.1% drop in March. ANZ economist Maddie Dunk says an expected gradual improvement this year hasn't yet come about, largely due to capacity constraints.
Given the volatility in this series on a monthly basis, I think sometimes it's useful to take a step back, look at the bigger picture. And what we can see is that private unit and townhouse approvals are down 31% compared to where they were in January. Now, if I compare that for houses, house approvals are actually up 2% over that period. So it's very clear that the weakness that we've seen in building approvals over recent months is being driven by softer unit and townhouse approvals.
Number 4. There are some positive signs for the housing market though. Core Logic data this morning showed house prices up 0.5% in May, the 4th increase in a row. And Maddie says housing sector credit also rose 0.5% in April, faster than in March.
We look at investors versus owner occupiers. The strength was coming from investors. So we saw investor credit growth up 0.55% in the month versus a 0.45% the month beforehand. And so that doesn't suggest to us that investors are, too nervous about the housing market. We haven't seen too much of a pickup in housing credit growth since the RBA cut rates, but some signs that it might be slowly picking up, driven by the investor side.
Number 5. Australian retail sales fell 0.1% in April versus expectations for a 0.3% lift. ANZ economist Aaron Luke says despite a bounce in Queensland spending after the cyclone, April continued on from a rather subdued first quarter.
We do expect household consumption to pick up to 2.1% by the end of the year, but so far the timely indicators have been a bit mixed. So real household spending and real retail sales were both flat in the March quarter. We're expecting global trade uncertainty to weigh on consumer confidence, and we did see a slight easing in the ANZ Roy Morgan consumer confidence in April. But at this stage, we don't expect the tariff announcements to have a significant impact on spending just yet.
Aaron Luke there. Now in our deep dive interview, ANZ Group Chief Economist Richard Yetsenga looks out to a big week ahead with Australian Q1 GDP data, steers on Asian trade, and that ongoing tariff uncertainty in the US. I asked Richard what last week's partial indicators might mean for Wednesday's Australian GDP figures.
In the lead up to the quarterly GDP numbers, it's not over till it's over. Sometimes the partials start one way and end up another, so we should wait for the full suite. But certainly at this point, the indicators we've had for the first quarter are looking a little bit soggier. We also get minutes for the May Reserve Bank Monetary Policy Board meeting, and the offsetting influence there really is that the disinflation process in Australia looks to have stalled. CPI numbers, the price measures out of the business surveys, job ads, these decelerated over 2024, but that seems to, or 2023 mainly, but into 2024, but that seems to have stopped now. So the minutes from that meeting also trying to, I think, thread the needle, navigate those disparate influences.
And so at the moment, what are you thinking in terms of how that GDP figure might print?
We're looking at 0.4 for the quarter, which is the same as the market. The year-over-year numbers, 1.5 as a result of that. Better than some of the numbers we had over 2024, but are less than many we're looking for at this stage of what was meant to be a consumer-led recovery in 2025.
Turning to Asia, we've got a lot of CPI indicators coming out, but export figures, I think, for South Korea, Indonesia, Vietnam. What are you looking for in those export numbers?
The trade numbers in Asia in general are likely to show quite disparate influences. South Asia doing a little bit better than North Asia, partly because of the technology influence and the concerns about where the tech cycle is going as a result of the US tariffs. Also, although on the tariffs, of course, there's some extra spanners in the works with these court decisions over the past week or so in the US. Tariffs off or maybe on again, but waiting for a judgment about the legality of the way in which the US has pushed the tariffs. And then, of course, we have the suggestion from the US Treasury Secretary that perhaps the leadership of China and the US needs to get involved because the trade negotiations between those two economies are maybe stalled a bit, I think, progressively over the next couple of months. Almost regardless of what happens, we are likely to see tariff effects increasingly come through. That means weaker export numbers out of Asia to the US, perhaps a bit stronger elsewhere, but ultimately trade weaker because of what's going on with tariffs.
It's an interesting situation because you got quite a low inflation numbers for the US on Friday and jobs figures later in the week. But I guess in a non-tariff world, those inflation data might be allowing the FOMC to cut rates. But what would the FOMC be weighing up as they look to those court rulings and then look to that lower inflation?
Well, for the Fed, obviously, inflation has been a bit of a mixed bag. The most recent numbers were more encouraging, but there are also some signs the other direction which suggests the disinflation process may have stalled a bit above the Fed's 2% target. The activity side of the economy also a bit of a mixed bag. Some areas looking a little bit soggier, but only soggy, and other parts still looking pretty good.
Richard Yetsenga there. I'm Alex Tarrant, standing in for Bernard Hickey, who's on a well-deserved break through June. That was 5 and 5 with ANZ for Monday, June the 2nd. Catch you tomorrow with an update on Australia's jobs market activity.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.